gentlemen, we got a Your Credit Matters segment for you today, brought to you by CreditSanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has the solution for you. 10 tips to secure the best interest rate on your mortgage. Buying a home is an extensive process. It includes marshaling your assets, reviewing your credit, and potentially trying to improve it, and shopping for a house that meets your wants and needs. That's all before you enter the process of applying for a mortgage and considering your offers. The process can be daunting, but it's important to take one step at a time to avoid becoming overwhelmed. One area where people become especially concerned is the overall cost of a home loan. Securing a mortgage can be challenging, but how can you get a good interest rate to reduce the long-term cost of your home? Here are some tips to help you get the best rates for mortgages. Just remember that many of these tips take time, so plan months or even years ahead for your home buying journey. Let's see. Tips for getting the best interest rate on your mortgage when you're looking to secure a mortgage or get the best possible interest. Personal finances really matter. Our tips include those related to your credit history, savings, and income, along with some advice about educating yourself on mortgage terms and interest types. Understand interest rate types, fixed or adjustable. A fixed rate mortgage has the same interest rate throughout the loan's entire life. This makes your rate and monthly payment predictable and consistent. An adjustable rate mortgage comes with an interest rate that can change, and often one that could increase if interest rates in the market increase. This can make your rate and monthly payment unpredictable. Knowing your plans for the future can help you understand which type of interest rate is best for you. If you only plan to hold onto the home for a few years before selling it to upgrade, an adjustable rate mortgage or ARM might work for you. This is especially true if interest rates are currently low, as an ARM loan tends to start with lower rates than fixed rate mortgages when all other factors are equal. Keep your credit healthy. You do typically need decent credit to secure a mortgage, but there are options for those with lackluster credit. While the credit score required to buy a home depends on many factors, the better your score, the better rates you may be able to command. Interest rates are a huge factor in how much your monthly payment is. Better credit typically equals more favorable rates, which equals lower monthly payments. Make a bigger down payment. The larger down payment, the lower your overall loan amount is. That can lead to a lower interest rate when you secure a mortgage. That's because your interest rate is partially based on your home's loan to value or LTV. For example, if a home is worth $200,000 and the loan is for $199,000, that would be considered a high LTV and is riskier for a lender. That could lead to a higher interest rate. If the ratio is lower, however, you might be rewarded with a lower interest rate. Have stable income. If you can prove that your line of work is in high demand with no sign of slowing down, or even if you work for a large profitable company, your lender may take this into account when processing your paperwork. Income stability demonstrates that you're less likely to miss mortgage payments. You can also demonstrate income stability by income history. Documents that show a stable income, such as check stubs, W-2 forms, and tax returns, might all be required by a mortgage lender when evaluating you for a loan. Lower credit utilization ratio. Credit utilization refers to how much of your available credit you're actively using. A high credit utilization rate occurs when you use a large percentage of your available credit. For example, if you have a $10,000 total in your credit limits across your credit cards and you have a total balance of $5,000, that's a credit utilization of 50%. The Consumer Finance Protection Bureau notes that keeping your credit utilization at 30% or lower helps improve your credit score, which can lead to better interest rates for mortgages. It can also ensure mortgage lenders don't see you as using credit in a desperate or risky way, making them more likely to approve you and offer better rates. Make mortgage point payments, if possible, to pay extra directly to your lender to lower your interest rate. For every 1% of your loan amount you're willing to pay up front, you may be able to get as much as a 0.5% off your home loan interest rate. Essentially, you're just paying a larger amount of interest up front. This is known as buying points. Have enough savings. Most people know They should have enough savings to cover about 6 months worth of bills, proving to your lender that you can still pay your mortgage in the event of a job loss because you have cash on hand and can help you score a lower interest rate. Final word on getting best interest rates for mortgages. Keeping your finances healthy is the best way to protect yourself when applying for a loan. Do the work ahead of time to ensure you're ready to apply for a mortgage. Then you can start by comparing rates online to secure a mortgage that works for you, or you can just simply call our team at 800-306-1990, 800-306-1990. We're happy to see how we can help you get that home loan to help you achieve that home ownership dream. That is the Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has these solutions for you. You just need to go to the website, creditsanitizer.com.